gentlemen, shake my hand, 365, and welcome to another Traders War Room where I'm going to be mapping out a lot of Forex, indices, crypto sometimes. Buy and sell signals for you, routinely using supply and demand, smart money concepts combined, and just making sure you understand the direction of price, because we believe that price is everything and prices in everything. And so if we understand that by tracking order blocks, order flows, we generally should arrive at high probable setups. If you're new, then that might be something that you might need to kind of like observe for yourself. But if you've been with us for a long time, you know, we've been doing this quite accurately for a very long time. This is, after all, War Room 79, right? So I'm going to get straight into what I want us to look at today. I'm just going to quickly pop up and share my screen with you. There are a couple of pairs that I thought would be interesting to look at. There are a lot of pairs that we're actually still waiting for, all right? So that's part of the reason why this war room will kind of like nitpick around things that we haven't looked at in a while. And then we're going to also talk about just the general health of the market. Why? Because, you know, the market right now is in a, an interesting state that we've been mapping out and trading quite specifically. But I'd like to just start with a full disclaimer. I'm not up to the task today. You know, I didn't do my full-on morning routine, so I feel a little bit low energy, and that's important. I think a lot of traders just open their charts all the time, just want to trade, and you're really just bleeding out your capital, right? If you have no sense of self, and that's not something that I talk about a lot on my channel. It's something that I've been saving, you know, for my module around trading psychology. But let me just kind of share a couple of things. I have a strict routine. I am very regimented about my routine, to a point where if I fall off my routine for a day or two, it throws me off completely, like for a week, for 4 to 5 days, right? And today I made the mistake of being indisciplined, so I didn't do my meditation routine. Sunday, so I meditate 7 times a week, you know, normally anyways. You know, sometimes with the traveling and all that kind of stuff, I can get affected. But today, no excuses. I am home, I was home, but I decided to kind of like sleep in. I had a very late night, you know, last night, just couldn't stop reading a specific book. My partner was, she was busy doing her own research, so we just stayed up, kind of like, just reading stuff until 1 or 2 a.m. So it threw me off, right? The whole point is it threw me off. I didn't meditate, and so it got me very sluggish, right? So that's an important thing for me to tell you, that I've got a sluggish brain, but I'm going to do my best to make sure we find rule-based trading setups. And I'd encourage you to do the same in your trading. Do the same. Be very self-aware of yourself. Right? So one of the things I need to do to get my frequencies up and my vibrational flow up is to say these words out loud with you. Right? It will help you, but it will also help me. Every day, in every way, I'm getting better and better as a trader. So showing up today is just part of that journey for me and part of it for you, right? So it's important that my mind knows subconsciously that I am still doing everything in my power. Most traders are taking the weekend off. Most traders are, blowing money fast. I am here to mine and do some work. So are you. So every day, in every way, I am getting better and better as a trader. I'm so happy and grateful that money comes to me in increasing frequent quantities on a continuous basis. I took this from Bob Proctor a long time ago. I believe this to be true because it is already happened. Everything that I have in my life is a result of me getting better, right? I might not be the best out there, but everything that I have right now is good enough for me to say, geez, I'm coming from a far, far, far place. I've gotten better and better. And because of that, understanding the universal law of polarity, I am centered in gratitude. Right, money is forever circulating freely in my life, and there is always a divine surplus. And in the markets that we're in the profession that we're in as traders, markets after markets, there is always money. There is always money. So I do not hold any, negative emotions from last week's trading session. If there were any stop loss hits, if there were any, drawdowns, I am really looking forward to the week ahead. Despite how I feel right now, I believe that money is forever circulating freely in my life. There's always a divine surplus. I am prospering every day. I am growing in wealth and wisdom every day, because after all, every day, in every way, I'm getting better and better, right? That's kind of very important for me to kind of like have done that with you. And I hope you actually are taking this affirmation part seriously. Right, so today I want to look at a couple of trades. I'm going to most likely teach on EURUSD and pound EURUSD, because we've been doing this quite a lot frequently, and it is astonishing how much money is being made using just my simple scenario analysis series. I've done part 1, part 2, part 3 on the YouTube channel. Please take the time to find those videos on EURUSD scenario analysis, and I'm going to be answering a specific question that I was asked in our free public Telegram group, the 365 Traders War Room channel, around NFP and you know what I think the fallout is going to be on Monday and all that kind of stuff. So we'll look into to that, right? Those first 3 charts there. And then as soon as we're done, if I can just pull this up, we'll then look at the following chart. We're going to look at EURCAD, pound Swiss franc, and pound AUD. It's actually quite tricky because these are very, 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 you know, positively, you know, correlating trades, right? So maybe, you know, if you find a setup in one, just ignore the other. You know, just you know, disclaimer. USD Swiss franc, you know, no, sorry, USD China yuan. I apologize, what I was trying to say. You know, had a beautiful, and we had actually mapped out in the wall. We had a beautiful 1:24 a couple of weeks back on this chart, and I've been waiting for a perfect pullback. Have not found one yet, so it'd be very nice to see if we can jump on this gravy train to the moon. Then we're going to look at the dollar strength, we're going to look at gold, we're going to look at some palladium. Palladium really is not really a trade in signals. Just for me, I think we need to manage our buys and maybe just call it quits. I'm thinking of just closing or at least breaking, you know, even or locking just a little bit of profits, because I don't think we're going to see that type of explosive strength in palladium anytime soon, based on what gold is doing, right? And I've spoken about how these, you know, what's a primary market between the two, so we're going to look at that. And then finally, even though there's really not much to say except repeat what has beautifully happened, which was my biggest money maker in the 3rd financial quarter. I had a monster Nasdaq hold sell, a monster Bitcoin sell, still holding, you know, Nike 225, you know, closed out on oil, still holding Brent Oil, and I want to manage those things, just show you the power of one good trade, right? In a cluster of, you know, multiple trades, right? So this is kind of like what I think we should do today in terms of our war room: EURUSD, pound USD, USDJPY, USDCAD, pound Swiss franc, pound AUD, USD China yuan, the DXY, gold, palladium, SP 500, Nasdaq 100, crude oil, Brent oil, and you know, the Japanese yen 225. And I think, you know, somewhere amongst, you know, all these type of things, we are going to have a situation where, you know, we can find some setups to manage, you know, existing trades and so forth. Just before we start, just a kind reminder, about 42% of people come to our channel, watch the videos, gain amazing information and knowledge, but are not subscribed. Why? You know, feed what feeds you, right? It's a Commonwealth principle, you know, and all it is just a like or a subscription. So if you're coming across this and you're still watching, right, technically speaking, if you didn't want to watch any further, I would have lost you by now. Retention on social media sites is only 30 seconds. If you're still here, please do subscribe, please do like the video, because it will be, you know, just an impactful thing for me as a content creator to keep doing this, especially on days like this where I feel sluggish. But nonetheless, I'm looking forward for your feedback. Do like and subscribe. Right, guys, let's get cracking. We've got a lot of beautiful things to do today in this market. Number one, Friday was NFP. So we had a new NFP reading. Just remember, these NFPs are so important to where price is going, so important to markets, so important to the fear gauge index. We should look at the VIX. Actually, let me just put a note here. Have a look at the VIX, because it's absolutely crucial. We're getting closer and closer to the next Fed meeting, right? Just about 2 weeks ago, believe it or not, the entire market truly believed the Fed was actually going to reduce, you know, the rate hike. The Fed was actually going to cool off, and markets had an incredible bull short-term bear rally, which I warned everybody about on this channel. I told you I'm not going to be caught dead buying anything, because I was waiting for the perfect sell setups to sell against them. And just because you know where markets are going to sell doesn't mean you can always buy to that point, because when markets do original turns on you, they leave you empty-handed. So now you're not in the buy and you're in the perfect sell, right? And when you're in the buy, you get wiped out overnight, right? And we'll use the NFP on Friday as a beautiful example of that, right? So markets about 2 to 3 weeks ago were very previous CPI readings that were, reflecting, that there was a peak in the previous month, and inflation was dropping, right? And that particularly just sent the markets crazy. I'm talking about institutions, I'm talking about Wall Street betting, right? And that created a lot of commotion. And all we had to do, if you follow this channel religiously, was just to be patient and wait. But I do always tell you what the markets expect, but I also always tell you that what I'm going to do is not financial advice, but generally speaking, although, right, previous track record is not an indication of future, outcome, right? Just because I've been right through and through since January does not mean I'll always be right. But the whole point of this channel is to provide the type of education that might give you a hint on where the scales lie and the higher probable setups, right? So, then FOMC came out, Jackson Hole Symposium about a week ago or so, whenever that was, and it completely crashed the market, and our sell sides ripped out. I had a beautiful NASDAQ hold, a beautiful Bitcoin hold, US30, SP 500, the J225 Nike hold, and those 5 or 4 big trades, right, literally mean I don't necessarily have to trade for the month of September if I want to maintain my monthly percentage gain. Technically speaking, those 5 good trades really meant that, right? So that's really the power of being consistent, showing up to these war rooms. But anyways, let's look at the NFP data real quick. Right, and this is this coming week. Okay, so NFP is just, the week before. Just give me 2 seconds, 2 seconds. Right. So, and this is one of the first NFPs this year that's finally a classic mixed bag of results, right? So this type of NFP freaks out traders. This is the type of NFP that you start to realize that a lot of traders are not really focused on the big picture, right? They're literally obsessed with just one number. And I've talked on this many times on the channel. NFP is a mixed bag of 3 data points. Right, check this out. Average hourly earnings, right, on the month-to-month, non-farm payroll, exchange, what everybody's kind of like obsessed about, right, and the unemployment rate. These 3 data points are so important, right? It's not just NFP, right? So obviously NFP was a big, not a big beat, but yeah, just above what was forecasted, 295, and they got 315 jobs. And you think, well, the logic, right? So fundamental traders. Now, in my previous war rooms, there's a teaching section I do now in every war room. And in one of my previous war rooms, about 2 war rooms ago, I spoke to you guys about the power and how institutions use algorithms, right, to push and cluster traders, right, in one specific place where smart money comes and does the opposite, right? And so fundamentally speaking, that's a basic fundamental trader. Positive NFP, strong dollar, weak risk on assets, right? So you expect the dollar to rally, EURUSD to fall, NASDAQ to fall because of this news, and that's fair and fine. But you have to think about what it really means, right? Number 1, number 2, look at this. The NFP is positive, but unemployment has gone up. Powell is not. Remember these reports. This is the last NFP report until Powell comes up. The only report that's left now is the CPI reading for August, coming out next week or this week in September. We'll find out now. All right, so now all of these small things, because the unemployment is slowly gonna have to go up if the markets are starting to absorb the impact of interest rates, which is causing pain to companies. And if companies are seeing stock prices fall and their valuations fall and the intrinsic value of the company fall, then surely we should start to see capitalists being capitalists and start to retrench people, right? So you're going to start to see a gradual, steady, increase in unemployment numbers. Number 3, the average hourly increase is decreasing for, and I think it's been on and off, right? But we've been worried about a potential wage price spiral, right? And now we're being told, well, it went down, even though we had slightly more jobs, okay, but the unemployment is going up again, right? So it's quite a very mixed bag of results, right? And this is why I always tell people, I can't teach you how to trade news events, when they get released and we go 7 lot size up, just for a couple of ticks, right? That's just, to me, predominantly silly and actually very dangerous. But maybe it's because I can't do it. So maybe it's because the reason why I don't like it is because I can't do it. If I can't do it, then I think you won't bother trying to teach it, right? This is pretty much how I operate. Now, when NFP came out about 2:30 p.m. on the public Telegram group, I did share with everyone there, the trade that I entered in an hour before, because I either enter my trades before or after, right? Just based on my market structure reading. And that's how we're going to get into, the question here that we have. And let me just quickly share my screen here. Despite the fact that NFP came out positive at about 2:30 p.m., at roughly about 1:30 p.m., I'd already taken a big buy. It wasn't big, to be honest with you. It might be a standard lot size, right? So a lot of people think just because using one standard lot size, you're risking a lot. It depends on your area of value. I took a buy, one standard lot size on the 15-minute time frame. It's about a 12 pip difference, so technically speaking, if you think about it, how much one pip is worth when you use a standard lot size, 12 pips was not bad, especially for my risk reward ratio. And my target was an H1 supply, which we got out of literally, right in time. This is just me breaking down the trade I did in the public Telegram group. Somewhere in there is the 15 minutes demand. There's the first supply that price rallied into because of the news, and a lot of people are waiting for the trade of the day, and they think that's the trade of the day. And that's dangerous, man, because if you do not, eventually get to a place where you are comfortable, with scenario analysis. Let me just quickly pop up EURUSD so you can see it, and then I'm just going to move into the question of the day, and then we will then map out signals. The questions that come from 365 students are so important for me, but also for you as a viewer, because you're really watching guys who are thinking through supply and demand, taking the course, who are understanding the markets, are now not necessarily relying on me to generate money for them, but they generate money for themselves. And because of that relationship that they have developed with the markets, their questions are some things that I might not think about answering by myself innately because of wherever I am in my life. But their questions are most likely the things that are most likely to bother you first. So whenever I do these Q&As, we really need to thank these guys for, being brave to ask questions, number one. But number two, just sticking their necks out like this, right? This is the 1 hour time frame on EURUSD. I just want to show you something real quick. This is what a lot of traders risk their accounts for. Literally, a lot of traders risk their accounts for this stuff. So my 15 minutes buy is somewhere in here, right? Like I said, and I buy at about 1:30 p.m., 1:30 something, 1:30, just an hour before NFP. Price rally straight into a supply, and then the movement, right, the true market reaction takes place. And this is why I say this all the time. Why would you over risk your account on news? So the news came out somewhere here, right, way after my buy, somewhere in here, technically 2:30, just in between this green and red candlestick, right? Why would you over risk your account for 30 pips? I literally say NFP moves, the volatility is roughly 30 pips. You would know this stuff if you calculate. I'm not making this up. I literally put it out in the group that, listen, man, NFP 9 out of 10 times will always only give you a 30 pip spill, right? But there's always a bigger movement in price. So you feel free to trade, the volatility, but understand the bigger movement in price, more importantly, where price is going afterwards, right? And all that stuff is in there on the public Telegram group. I feel like I should read it out, but it might waste a lot of time, right? It might waste a lot of time, but it's important for the learning part, right? And the thousands and thousands of many retail traders are waking up today claiming to be fundamental traders. Fundamentally, right, EURUSD is supposed to fall, but the first 30 pip movement went up. So fundamentals lost a lot of money on Friday. I guarantee that. I guarantee a lot of people lost money because they believe that fundamental trading is over risking your account on a news event, specifically NFP. This industry is truly fertile ground for nonsense, right? Maybe I get a little bit emotional sometimes. But you have 30 days, literally. What I'm about to show you is what I'm saying here. You will always have 30 days. You will always have 30 days. 30 days between NFP plus, sometimes 33 days, 34 days, depending on when the first Friday of the month is. 30 days to have mastered the pattern of price when it comes to NFP. If you're still losing to NFP, right, and this is not the question I was asked, I'm just talking in general. If you're losing to NFP, stop trading it. You are not yet committed to getting this thing right. Because what I'm about to show you is what I've shown you in part 1, part 2, part 3. Right, and I'm showing you this, that this stuff is so methodologically repetitive, right? It is impossible to miss unless you are methodologically dedicated to just not being disciplined and mastering your charts and wanting someone to save you, okay? That's why I have so much respect for 365 students. Their questions matter, because when they ask these questions, you're going to see the question I'm about to read. It's deep, it's decisive, there's been a lot of thought put into it, and I appreciate that, you know. Now, so I continue to say, look, man, you know, all you need to do is to pick an asset, just one, EURUSD, Pound USD, USDJPY, it doesn't really matter. Look at all the last 12 NFPs. Yes, it won't take you that much time. Through 4 timelines, monthly, weekly, daily, H4, and understand market reaction. So check out, NFP comes out at the same time at different financial quarters, depending on the time zones there, right? But most of the times either 3 o'clock or 2:30, whatever it is, or 4 p.m., you figure it out, right? And then you will realize that you killed your account so many times for a mere 30 pip spike. I say this at about, I don't know if Telegram will give us the time or what time I say this, but I say this in the morning. All right, even on my social media pages, this was up. I said it in the morning, put up the links, put up the chart scenario, and as this way EURUSD was in the morning. So of course I was going to buy that day. I was going to buy that day as an intraday trader, whether there was NFP or no NFP, right? The trend was up. My daily was up. My hourly scenario analysis was up. My targets were supplies. My demands were we were a bit hammered, 1, 2, 3, right? But price had left, and these vertical lines are the markings of when the London session is going to start. So all I had to do was wait for the London session open, and I'll show you how that looked like on the chart. I'm going to be bouncing up and down different charts today, but I would really rather teach today, you know, than just spout out signals, even though I know people want the opposite. This is the opening on Friday. It opened a bullish engulfing pattern. So I see this red candle, I do nothing. I see a big bullish candle at 11 a.m. I go, oh, okay, cool. And then I just put a pending order. Instead of put it on the 1 hour, I do multiple time frame analysis, smart money concepts. I find a perfect entry all the way down on the 15 minutes time frame to increase my risk to reward ratio. Because of how perfect that order block is, let's go to the 15 minutes chart so you see it for yourself. Because of how perfect it is, what did I click it now? Sorry. Oh, did I go 15 seconds? Sorry, so there we go, 50 minutes. But because of how perfect that this area of value was, right, this is Friday, am I right? Friday, 9 a.m., there it is there. You see that there? At 11 a.m., all I do is ask myself, how big is this zone, right? The zone is about 12 pips. I remember this like it was yesterday, right? This is 10, so let's just increase it. My area of value is up there. I put one standard lot size because I know, you know, I'm risking about $120 there if I am correct, right? $10 per pip, whatever. But if I am right and I use this 15-minute order block to the very first 1 hour supply, according to the stuff that I've taught you guys in scenario analysis, then all I need is a maximum of 1:3, and then I am golden. And this is what it was looking like. Did I choose the wrong thing? Sorry. Long. We go long. There we go. Right, so stop loss just down there, profit target right there, right? It's just under 1:4. So I've got a perfect 1:3. Why not? NFP comes in. I am no better. I am no wiser. I see the data thing. And I tell you guys, literally in the group, and the time is very, 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 very important. At about 6 p.m., I don't know, 4 p.m., I start breaking this stuff down in the public Telegram group. Look, I'm closing oil. I'm closing my NASDAQ. Unfortunately, I have to. I'm closing my buy on EURUSD just at 6:09. I'm not making this up on Friday. This is important because some of you love those mentors who show you paths, not information. It's weird. It's very weird. Maybe I should just record all my videos in my garage, right? Maybe you guys will subscribe. This is quite silly. Right, check this out. I hope I've been sharing the right screen. So I've just been bouncing from screen to screen. I really hope, you know, I've captured everything here. Right, this is about 9:06. p.m. on Friday evening, right? So I explained the whole thing. I show you the time that this whole thing was entered at 9:30. So it wasn't an NFP, buy hub thing. And I say, I'm closing the trade now, calling it a day. Be careful on Monday, blah, 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 long weekend ahead. This is 10 past 6, because it's now about to engage in supper time. Markets are literally about to hit an H1 supply, and there's no ways I'm holding the buy into that. Not if I've been paying attention to scenario analysis on EURUSD, and lo and behold, literally at 6 p.m. Remember at 9 past 6, I'm saying I'm closing. At 6 p.m., markets arrive inside that 1 hour supply. Let's go to the 1 hour supply. I think I'm making this stuff up. There we go. This is 5 p.m., 6 p.m. Markets start to enter right there. I close, and before you know it, before I'm even done chewing my supper, at about 7 p.m., markets have ripped a hole, wiped out. Even I could have been wiped out, right? Wiped out any type of, simplistic buy trade. Why? And this is the main part of the point. This is really where I want you to be with me. You need to understand the movement of each asset you're going to trade. Leroy, there are 100 assets. Start with 10. Start with 5. Stop. There's no excuse. Why? Because if you think back to scenario analysis part 1 video that I did with you guys at the beginning of the year, you will realize that I tried my level best on camera. It takes forever to do this on camera. But for you to see the benefits of such an exercise, you need to know your asset. Your asset will always tell you how much on average it will move. I mean, I've got on the floor, they have this on spreadsheets, by the way. I'm very big on spreadsheets because I feel like if a trader goes through the manual process of printing all this data, some of it gets ingrained in their conscious mind. And then if I drill them, remember, my floor traders have no choice but to do what I ask because they work for me in a very nice way, of course. But this is important because if we look at the history of EURUSD, right, EURUSD moves on average about 100 and something pips, between 85 to 110 pips, depending on the day. High volatile days, 135. Then there are consolidation days where we do 32 pips. Now, if NFP is going to jerk price in one direction for a mere 30 pips, I'm still missing volume. I'm still missing 70 to 80 pips of price movement that day. So if it goes up by 32 pips and there's a supply just above, I have to assume logically on a scale of probabilities that the real movement is later on. Everybody's been trapped in this buy. I better get out because it's going to be a full sale, right? I just chose not to sell on this past Friday because I was done intraday trading for the day. Right, now straight to the question before I overshoot my time and you get bored and you just want signals, blah 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 blah. I just want to see. So this is May NFP. All right, so this is this year. So I mean I could go back on scenario analysis until kingdom come. But let's start off with January, February, March, April, May. So that's not too long ago. May. Now here's the question on the public Telegram group, which I absolutely thoroughly enjoyed to read. Just why? Because traders, when my registered students ask questions, like I say, I have so much respect for these guys. They are literally grinding. They are putting in the work, and it's important we address this stuff, right? So last month, I hope you guys can see this. I hope I'm sharing the right screen. Last month, NFP number were good. Yeah, they were good, right? But on that Friday last month, right, the previous month, markets continued to drop. Cool. But on the following Monday, from the Asian through London session until New York session, we had a 239 point rally up. So he's saying, look, man, markets drop on Friday, and then they kind of drop, and then as soon as the other sessions changed over, there was a rally up, like a recovery, a relief run up. All right. But when the New York session opened, you have to understand the complexities behind this question. So this trader understands that there is partial fragmented direction in price. Number one, and we say price is everything. Price is in everything, but price is fractal. So right now, this question is about the fractality of price. The fractality of price on different sessions. There's an Asian session that starts first around about midnight, all the way down to 8 a.m., 9 a.m. Right, 9 a.m. is the London session. Somewhere in the afternoon, 2, 3 p.m., 4 p.m., depending on the time zone of the year, is the New York session. So he's saying, look, man, But when the New York session opened up, all that was wiped out, right? So the New York session then opened up and wiped out all the buying that had been happening, and it fell for a 298 point. Why is this so important? This trader, you need to know this stuff sometimes, man. You need to know that if I buy this market, I'm only in for about 30 pips. He's talking about points. I'm pretty sure he's looking at indices. I'm only in for 30 points on the NASDAQ. I'm only in because if you don't do that, you just have unrealistic projections. Right? You're like, oh, I'm going to hold this trade for 50,000 points. Right? I'm going to become a millionaire. It's unrealistic because you have no idea of the market relationship. So shout out to Lord Colin. I appreciate your question, man. I'm thinking we can expect the same on the Monday rally during the Asian London session, and then a sell-off in New York. Could be wrong, but I see it as plausible. And I absolutely agree with you on that. And I hope your question has been absolutely clear. Right. So I thought I'd start off with this and explain this kind of stuff because it's important, because I'm technically really here for registered students and everyone else, but it's just definitely something that we cannot ignore. Right, so I'm going to use EURUSD because it's actually technically difficult, more to read than indices. Indices are quite simple to read. Forex is a little bit a jumpy. Right, now I've taken a screen grab real quick, and I hope you guys can see this quite clearly, of NFP. This is NFP data. Why? Because remember, you said last month this happened, NFP was positive, but markets fell. Why? And is the same thing going to happen on Monday? And this is important because like I say to you guys, this is one of the first NFPs where we finally had a technical mixed bag. Mixed bags are good because it finally means that the markets are feeling something. A lot of traders are not talking about it. This is a big month for the markets, guys. FOMC on the 22nd of September, or God knows when. CPI in a few days. On the 15th of September, there's going to be Ethereum merge, right? That's bullish. But on the 15th of September, there is going to be, I'll do a video on the stuff that's going to happen on crypto, actually. Just leave that by the side. But I expect a lot of crazy psychotic volatility this month. In fact, if you're not good with your trading, this is your learning month. Either register now to learn, stay out of the markets and save your capital. But if you're good and you know when to get in, get out, there's going to be a lot of swings this particular month, both fear and a lot of optimism. And something's going to have to give. But if we look at the history of NFP, so I said I'm going to start off with May. Look at this. So we had positive readings in May, positive NFP in June, positive NFP in July, August, and now September. All right, so it's been a constant beat. All right, so we want to see the relationship of positive NFP and market structure, and feed into what Lord Colin said. Guys, I could end the war room after answering this question. This is, to me, is more important than buy here, sell here. Technically speaking, this is why I always tell people, take the course. It's literally the best decision you could ever make for yourself. Right, so I've got EURUSD on the 1 hour time frame, and I've got my NFP stuff. So remember, every month I'm about to show you from May up until yesterday, Friday, every single month has been positive. We don't have to worry about mixed data. We're not dealing with, oh, this month was negative NFP. It's been positive, 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 drop it, drop it, drop it, drop it. So now we want to see the structure. We want to see the structure before and after. We want to see how NFP can influence trends into not only just Monday, Tuesday, Wednesday. Full disclaimer, Colin, by the way, this coming Monday is a dead market, right? So it's a public, some type of market holiday. I don't remember what it is. I had my PA just block out all the market public holidays until December. I don't really care what they are. So I know I'm not working this Monday because markets are dead, especially the US market. So we might not expect a lot of volatility. Price will still move, but it might not be a big deal. Right? So it's Tuesday where everyone is back on their trading desk. It is also summer markets, the last month of summer markets, spring. So just bear with them. Right. So on the 1 hour time frame, we're going to assume NFP was round about here, 2 p.m. 2:30, right? And so boom, markets rally into a supply that was created right on the 5th, right? So let's pull this up real quick. Let's try and do this in a methodological way so that we are together. This will take a big chunk of today's video, but it is with price. So 6th of May, we're looking for the 6th of May on the charts. We don't want to do anything random. We don't want to make random calls. We want to be very accurate. 6th of May, there was NFP, and that NFP was positive. Once again, 6th of May, we're expecting 390K jobs. They got 428. Positive. Right. So if it's positive, we expect a strong dollar, and we want risky assets to fall. It's not me, it's the fundamental rule, right? There is the actual greater than forecast is good for the currency. So we want the dollar to be strong. The dollar is strong, USD needs to fall. Right, so that means that day trade idea that I had, that you had, that we should have all had was for supplies. There's a supply here on the 5th of May created a day before, 24 hours before at 12 p.m. Boom, bearish engulfing pattern. Boom, imbalance. Boom, break of structure to the left. Boom, boom, boom. Boom. The next day, the day of NFP on the 6th, market opens a little bit bullish, starting to fight the previous lows, rallies up, literally running in the morning. And as soon as that NFP data drops of a positive NFP, price has already found itself in a supply. So what happens is you have a crazy reaction. You can see these wicks happening there on the 1 hour time frame. Right, when I look for the 2 p.m. candle, right, as markets fluctuate down, this is the NFP reaction. This is where people over risk. This is literally the over risking candle because price has literally just check the wick. The wick is 32.5 pips. That's all traders want to trade. Traders will trade this stuff and go drink on Friday. Tell themselves they've worked bloody hard. And then they close quickly. Right? You've seen these videos. I'm not making stuff up. And then price continues to fall by itself for 102 pips up until the next day, Monday. And then markets rotate around, bullish engulfing pattern, open up back into that supply the very following week, hit the supply, and price continue to fall. That's one way to see it. So that's May NFP, January, February, March, April, May, June. Look at that. Boom. So the strong dollar rallies for pretty much half of the month of May as Euro USD falls to these incredible lows by the 12th of March, and then it starts to build its way up into the next month, and it keeps going up and up and up. I'm looking for June NFP, you'll forgive me, and I've got all this. I know how many pips price moved this day, that day, this day, that day, because like Lord Colin, and that's his name on Telegram, so I'm just gonna read it as it is. You have to know this information. Right, I need to know, because remember, you get paid according to the amount of pips you catch, times your risk, your leverage, your lot sizes. But if you don't know this stuff, what are you doing? Trading. If you haven't, like, I want to be blunt, if you've not taken the 365 institutional supply and demand traders course, at least my module 1 and 2, you are literally swimming in cesspool. You're fishing in feces, hoping to find a gold bar, and you might also catch cholera along the way. You know, it's neither here nor there, but each to their own. Right, so let's keep pushing. We're gonna as quickly. Then the next month happens, June. Once again, I'm not making this up. According to the data on the 3rd of June, NFP was positive. Cool. I've done these videos with you. I've done Signals Analysis 1, 2, and 3. You just haven't gone to watch them. I'm giving you a snapshot. So we're looking for the 3rd of June. The 3rd of June is right here, 10 a.m. London session in that morning, 9 a.m. Markets drop down. They run down. I get my camera from the channel. I record scenario analysis part 1 just before NFP drops that day. And I say, guys, this is how you do scenario analysis. We're going to do this for about an hour, 30 minutes together. And then as soon as I'm done recording, NFP is most likely going to drop. If this candle happens, if this happens, do this, do that. I did that for you that day in June. Videos on the channel. And price played literally to my flute. Not because I'm a genius. I'm just saying, this is how price reacts. So markets find an unfilled order block. Wait a minute, NFP is positive again. Wait a minute, but there was a supply. What you're missing here is supply is done before. It's done before. Colin, man, I will answer your question for next week. Let's just catch up everyone with us real quick. The supply is there. As soon as the results come in at about 2:30, you can see the 3 p.m. candle between 2 and 3. 2:30 is when the NFP drops. There's only one green candle. The last down buyers surging up into a supply, running into a supply. Markets collapse, retest, Asian session for the next Monday. Price falls for a couple of days. 7th of June, market cycle up. Liquidity, this is a clean liquidity. We spoke about this on the channel. Short-term buys in this intraday trade. Why? Well, there were unfilled orders. I wasn't going to just ignore them, right? And this is how my London session opened the following day. So we take the buys up and look at price. This is not for retail. This is for me, just to punish me, right? In the event that I'm somewhere here hoping to sell again, market stop loss hunt. But Leroy, how would you know not to do that? You know, of course, we talk about different kinds of areas of value. Areas of value of specific rules. You have to calculate how much unfilled orders are in there. If the money has been drained too much and you keep trying to buy or sell in a specific area, as taught in support and resistance, you will pay the price. 1, 2. Leroy is done with that. So, right. This is a beautiful sell, but there's no ways I would have survived that spike. There is just no ways. I would have had a stop loss hit. And it is predominant, right? Predominantly the case. Anyways, still based on NFP readings, still based on a strong dollar, falling euro, markets fall the following week, right? Remember, Friday was the 3rd. We're literally talking about the Tuesday, Wednesday. It's the 9th of June, and markets collapse. Boom, collapse, just like in May. Collapse, collapse, collapse. And then it's a recovery period. January, February, March, April, May, June, July. So now we're looking for the next month. July NFP, you can see markets never really went back up. Still falling, still falling. We're on the, whoa, in July now. Oh, don't tell me I don't have July NFP marked up. That would suck, but we have to keep it moving. We have to keep it moving. When was July? July is the 8th of July. So we're looking for the 8th of July. Just bear with me, I'm almost done. Bear with me, I am almost done. 8th of July, this is the 6th of July. Surely I had this thing marked up. Ah, there we go. Of course I did. Of course I did. There we go. July is marked up. Right, same thing. NFP is positive, positive, positive. Right, but what happened before? Somewhere in the Asian session, a supply was created on the 8th of July. What are we looking for here? 8th of July. So 8th of July at about 3 a.m., NFP is at 2:30. A supply is created, an imbalance is created, a confirmation is created, and in the opening, you know, look at this. I'll do a video this week around structure, right? I'm going to teach you guys again on structure. I'm building on the stuff. But if you look very carefully here, there's what a lot of retail traders have been looking for, right? There's this moment in time where price stops here, tries to bounce, stops again, breaks underneath here, and I would assume there's liquidity. And what we like to tell traders all the time is it is always wise, if there are two supplies, to always choose the higher supply. I've talked of this thousands of times. So this zone is there at 9 a.m. So we put our pending orders just above, right? Markets drop at 9 a.m. and spend the whole morning running. The whole morning running, you know, towards price. Okay? I'm not going at the camera there, but that's fine as long as you can hear me and you can see my screen, right? I think you can still see my screen. We'll do it the rest later. Right? Cool, cool, whatever. Right. So there we go. NFP. Somewhere there. 2 o'clock. 2 o'clock, 2:30. We've got the same pattern from the previous month. Look at these candlesticks. There's something off about these doji looking candlesticks. Look at the 2 p.m. And remember, NFP is in between these 2 candles, about 2:30. Right? I'm going to put an information whip into my area of value. That's 35 pips. What did I say? NFP will create a lot of volatility that will only push price for 30-something pips into our supply zone. We all get triggered, right? And if this is your movement, then you're a buyer, right? You literally bought up, right? And you can see there's a big green candlestick that confirms that we are crazy to sell. Those of you who are not disciplined enough to hold. And then by 5 p.m., the real movement operates, right? The price falls non-stop the whole night. Technically speaking, a whole day, a whole night, all the way into the next session for almost 82 pips. Once again, what do I want to catch? 30 pips or 180 to 110 pips, right? I ask you this, right? June NFP, same impact on risk on assets. This is why your NASDAQ and all these things have been falling. You just need to understand correlation charts, right? Price falls, tries to find, you know, some type of medium, gets slightly above the July NFP, right? But we know there are higher NFP zones up there. Pocket somewhere else in the end of the month, June, July, August. Now we're coming to August NFP, which was just last month. This was literally what happened last month. Right, market here, when was August NFP? On the 5th of August, where jobs doubled. That was like really crazy, right? So it was really crazy. It's the 5th of August. I'm going as fast as I can, believe you me. Right, you see previous day, on the Thursday night with a rally-based drop, right? Old school supply. There are different types of supplies and demands anyways, right? Consolidation, complicated 365 candles. NFP comes in at about 2:30 p.m., right? The shocking, incredible news happens, like literally bananas, but look at the markets. This is where the data, the unemployment, wage spiral plus NFP comes into play. Look at what the markets do. Markets drop for the day, all right, for the hour, for the reaction, right? A big old full 74 body candle, right? So massive shock waves, and then slowly throughout the day, Euro USD starts. I never took this by, but you can see it's not marked and they didn't take it, right? You can see the following Monday was a bullish engulfing pattern that price was allowed to sit on and test all these things. And for sure, if we're expecting a big full-on drop like before, it doesn't happen because the DXY in the month of August did not react normally. The DXY was still stuck in a supply. So the dollar is falling, despite the fact that you've got the biggest NFP number. Look at this. This is August. You had 428K jobs created. 390. Here you have 500,000. But because of where your dollar is situated and how everyone has been brought into the markets to think one specific way, right? The dollar falls and Euro USD, the literally 2, 3, 4 days later, that Tuesday or Wednesday, markets both up, explode to the higher side, smoking a lot of people, and then starts to drop as the dollar starts to recover. And that drop has been happening non-stop. We finally got into some decent demands. The charts that I showed you guys, asked you guys to pay attention to this. And then NFP happens this past Friday, and here we are. Supply 30 pip to the upside, but by 7 p.m. up until markets close, price rallied all the way down a full 90 pips, right? So that's kind of like the history of NFP. Now, once again, the question is, can we expect the same to happen on Monday? That is a rally up. So, whether it's NASDAQ or whatever it is, basically Colin's question is like, well, can we expect the same to happen? Can we expect by the Asian session to start doing something like this, and then the London session to pretty much do something like this, and say maybe at about 3 p.m., 4 p.m., 2:30, whenever the New York session starts, we then get an incredible pullback down, as has been the history of NFP. And my answer is, yeah, we can expect something like that. The only difference with this type of NFP is, number one, Monday is quite a dim holiday. All right, I just don't know why my calendar is blocked out, but I no longer question the gods. If I'm due for a day off, I'm due for a day off. So it's a banking holiday. I just know to stay away from the markets, just so I slow down. Right. So I do know that Monday is going to be. I think we should expect low volatility on Monday, personally. But more importantly, I think markets will be interested in continuing some type of pattern. Right. The only difference now is we'll have to kind of like see where price is, right? So if you check on the daily time frame, all of that noise, all of that movement, everything that just happened on the daily time frame was to just set up the formation of an original trend, creating a bearish engulfing pattern. I saw Sia talking about how S&P 500 took a quicker turn, than say a desired area of value, right? This was a desired area of value to sell all the way up there. And this past week, the markets engineered their own supply, used the NFP to tag this bearish engulfing pattern. And so we can't wait for a retest. It happened. The retest for this daily bearish engulfing pattern has happened. And then if you look at the 1 hour time frame, I do these multiple circles to show you the number of times prices rejected from that zone, which for our trading strategy is now telling us that, look, man, that demand is, weak, right? So feverishly weak. Right, so I am more wired to look for more sells throughout the sessions. But I'm assuming you're talking about indices. So if you talk about indices, then yeah, sure, you could get a couple of points up, and then definitely, you know, a bigger sell print. But this is my Euro USD on the weekly time frame. We're inside this red zone here, which we marked out a while back, because of just the fact that we'd arrived at it the very first time somewhere there, went up, and now we're coming back into this red zone, and we are digging through it like no man's business, right? If you look at the governing time frame of the red zone, you realize that there is some type of demand, right, that's holding that place B. But we've seen Euro USD take out multiple demands that were looking strong, whether they were COVID recovery demands or even previously much more lower demands for the 2018 short-term crisis. You know, USD has been very unkind. It's been a complete falling knife. So I would honestly say on Monday, Tuesday, let's pull up an indices so that we can actually look at the points. I would also say just be very careful of that. Be very careful of the fact that no one will care much about price moving, and so you'll have a lot of retail traders on Monday, and if you do, then sure, you might get activity to the upside, right? This is what my Nasdaq chart looks like right now, right? And you can see for me on Nasdaq, however, there's still a a beautiful fresh supply that still needs to be retested. But I said in the previous forum that it might not be, because the first sell order blocks that we need to get hit are the Asian ones. So I showed you, J225. I said this week, instead of waiting for this to get tested, take the trade on the Nikkei 225 because of the correlation between Nasdaq, and for sure on the 30th of August, which I'm pretty sure was Monday or Tuesday, we got triggered into that, right? And markets just followed suit, right? So this is September, sorry. 30th of August was Tuesday, right? So literally Sunday, the war room I did on Sunday. Monday, price gap down. On Tuesday, that whole zone was filled in, price started to fall. And if you go to the Nasdaq and you look at the 30th on Tuesday, you literally get a correlation reaction on markets, right? And this is important because time zones matter, the sessions matter, who gets to move first. So let's find the 30th. This is the 30th right there. Markets try, week up as high as they can, don't make it, and they continue falling, right? So I'm not necessarily expecting a lot. I mean, if this area of value here is cleared, which it looks like it is, then you might get some type of resistance. And I don't mean resistance in the technical trading sense. I just mean stubborn traders here. All right? Stubborn traders here who might want to push this thing up. And if they do, let's see how far they could go. All right, man, look at this. Is that a possibility? Absolutely, that's a possibility. That's possibility one. That's a bearish engulfing pattern. Mitigating a bearish engulfing pattern. This is nothing. The up here is nothing. So the moment you see price go past, 12,600, just throw everything away. Everything that I'm saying, just check it out the window, because after price goes over this area here, then it could free run back to 1300. I don't know what could cause that this week. I really haven't looked at this week's calendar. Let's just quickly do that together now. Cash rate, not important to us. Pound, monetary policy, sure. CAD, sure. Nothing. Thursday. Isn't CPI this week? Oh, this is still this past week. No, it's not. This is next week. Yeah, this is coming Monday. I thought CPI would be this Friday. Maybe it's the following week, right? So on Wednesday, Thursday, and Friday, CAD unemployment, right? So there's not much happening this week in the markets that would make me want to be very convinced of a lot of activity. Granted, also, like I said, Monday is just quite a chill day. Yeah, so man, I think you should just trade it, based on what you see. All right, trade on what you see. For me, the trend is still down. So I do believe there will be a massive sell-off. I also believe that this price here is overextended. So you are right in anticipating some type of short-term buy rally, but we'll know by 9 a.m. tomorrow. You will know by the London session, based on how the Asian markets operate. You will know, right? I mean, I could have drawn a very stringent, tight upward trend line here, but I find that quite useless. This area down here at 11,1200 or 11,600, sorry, has already been used. So this is the only fresh order block left. That's why I would like to believe that there might be a little bit of noise there. I'm not saying take this trade. I'm not saying I'll be taking this trade. I will not be taking this trade at all. I'm not a buyer in this market. But I do believe that if there was a specific order block to get some work done, it'll be somewhere here. Otherwise, if this area melts right through, then I'm really hoping we come back and revisit, the recovery area all the way down there. Not only that, but I hope we can finally have the balls and the dust to break it. It's done a good job. I mean, it's literally, put some fears into some bears for a while. But we spoke about this in January, that price, no matter what happens, come hell or sunshine, was always going to come retest the order block. But look at how the order block looks now, because we drew it originally there as the start, but price dug very deep, and now it's been held by daily orders, not being held by the government, right? Price literally dug through the government. How people realize. So this is not a usual retest, right? Price should have come up here on the Nasdaq, retested the close, the open of this red candle right there, and gone up. What price has done is just dug deep and dug deep, right? It's a silly candle for now, but it's only the 4th of September. So this is a 4th of September. This is a monthly candle. We're gonna see. Remember, I said on the public Telegram group, on the first of every month, a long night for me, because I go through 100 assets just to log into my journal how the month closed. Did you close higher than the previous month? Have you now created a bearish or engulfing pattern? Is it a PCP pattern? What's going on? I do this religiously. And if you do that, you organize the way you do it, you start to realize, damn, 90 of these charts are talking the same language and the other charts are doing the same thing. All right, so I spent quite a bit of time on this, guys. I'd love us to really move on to the signals, right? The thing that you guys want as quickly as possible. I'm not that excited about price action this week. I think there's a lot of waiting to do. I think there's a lot of money to be made in scenario analysis. The trades get triggered within 24 to 48 hours. I mean, it is literally something that you need to learn. And if you really want to learn, once again, the link down below, click there, click here, and register yourself. It's literally worth it. Register yourself, get my module 1, module 2 up front, and then just join others as they wait for module 3, which will not be charged extra if you get it in now, right? No one is paid for module 3. That's the beauty of the pricing, right? Module 3 is on deeper smart money concepts, but module 1 and module 2 are the basics of understanding supply and demand. You have to master these basics, right? So, like we said, we're going to start off with the classics, right? EURUSD. Even though we've spent a lot of time looking at EURUSD, and I've already done the NFP stuff that I wanted to do on EURUSD. So maybe I can just move on from that actually and then show you Pound USD. Let me show you Pound USD. And the reason for that is because if you think about it, so before we do Pound USD, right? Let's quickly have a screenshot, a mental screenshot of EURUSD. I want to show you something. Right, this is what EURUSD looks like on the monthly time frame. Cool. Let's go to the daily time frame. This is not my scenario analysis chart. This is just my normal swing chart on EURUSD. Right, clean break of market structure, flip zone, original turn, the combo in module 1, all that stuff, areas of values, boom, boom, boom. The stuff I teach from week 3. So lecture, 7, 8, 9 in the education series. If you see it, you gotta believe it. It is right there, right? So markets make a stretch, markets make a move, and this is the end result of it. And now markets are pressing down here. So this is it. Now I want you to observe this pattern here. Observe all the green, complicated 365 candles, counter trend, whatever you're taught to call it, right? Then markets break up. I've done why it's important not to miss out on swing trade ideas, right? I did that on a previous forum on this chart for you. I've told you guys there's about 11 perfect entries on EURUSD that have manifested themselves since the beginning of the fall, all the way in May 2021. I'm not making it up. There's 17 May. 1, 2, 3, 4, 5. Only 17 for a perfect swing trader. And a couple of them actually still have not been filled. So if you really think about it, you're looking at about 6 filled perfect swing trades and 5 unfilled perfect swing trades. That's the number of perfect opportunities for a swing to positional trader. That means if you miss it that 1 week, you get undisciplined for a week. If you're not in front of your charts, because this is work. This is work. This is how it works. You have to stay focused. You miss the golden entries and you can't hold. All you're doing for the rest of the year is chasing your tail, right? And we have to acknowledge that it takes great discipline to do the stuff. But once you know it, baby, and you are disciplined, you buy the life that you want. I don't push the money side of trading because I know it takes people forever to figure out how serious, how bad they want it. You like the idea of trading because you see fast money on Instagram, right? But are you ready to become a trader, right? So anyways, perfect swing misses. There's 11 right there, entries, and I'm sure price is already created number 12, given what happened in NFP on Friday, right? So this is it. Now I'm gonna take you and show you pound USD, which is about an 80% correlation with Euro USD. That means if Euro USD is not clear for me, you can always come have a look at pound USD. Look at pound USD, cleaner, easier to catch levels, because the complicated process seems to always run into a perfect supply, right? And now I don't want to close this trade. You know, sure, I've missed my entries on Euro USD a couple of times, but look at pound USD, right? Pound USD has been very consistent in printing very clear things. But let's go to our governor, guys. This is good stuff. This is good. This is real market education. Check governor time frame. We are running into an interesting time in our trading lifetime. You know, when I start teaching the course, if you register for the course, the first lectures I do here, module 1, lecture 1, 2, 3, 4, 5, is about major turning points and how to profile an asset. That's how you should start with your trading. You don't even know what that means. Just do this. Look, it's not even hard. You just click here. This comes up. You fill it in. Someone in my team gets in touch. But look, just a contact form. It's a simple contact form. We explain it. We explain who we are. We actually offer a 100% payback guarantee. Whatever. But check this out. 365 traders, be very careful. History is about to be made. We are holding, I hope you're holding pound USD, but we're holding this trade going somewhere. Euro USD, I've missed a couple of swing entries. I've told you about them. Intraday, Euro USD has been fun scenario, but in terms of swing, I have. But this one I don't want to let go because I just want to see something. Look, if I zoom out here, there is nothing. There is absolutely nothingness. Pound USD is leading the Eurozone into uncharted territory very soon. And it was me who told you a while back that be very careful because Euro USD might all go all the way down to 60 cents. And it sounds crazy. It sounds crazy when you say it. I said this about 3 months ago, 4 months ago. Now on 99 or whatever we are, right? And now this, to me, seems to be the last hope for the pound. If we break price where it is right now, the only thing stopping price or arriving at price is below. You see this wick here? Let me just make this area big. See this area here? Look at this wick. Somebody look at this. Is crazy. But we're about to clear that, right? And somewhere in here, I know there are a lot of support and resistance traders, oversold, indicators, blah, blah, blah. But the only true governing demand is slightly below. So we're about to get into a liquidity trap here. Please be aware of that, right? We're about to get into a lot of nonsense we have put in yellow. And here is the only big bullish response for pound USD if one was to exist. Then I go back to Euro USD and I want to see the same thing in Euro USD since there is an 80% correlation between these charts, right? There's an 80% correlation, right? So I go to my governing time frame, right? I've told you guys this demand was going to break. It did. I said hold on the buying. Even here it's going to break. It did. Those who listened, listen. Now I'm asking you again, be very careful, because if Euro breaks this, and it seems like pound is going to break its area first, but it seems like pound has a safety net just below. But if Euro USD takes this out, and there's an 80% correlation between Euro and the pound, well, where's price going? A whole lot lower. That means pound has to eat through even that fresh demand it's about to approach. I hope you understand. I really hope you understand, because when I start to incorporate long-term trends, if I start to incorporate long-term trends if I start to incorporate long, it's not a loop, I'm repeating myself on purpose. It is going to be interesting to realize that the next logical low touch for price is somewhere in here. If I just incorporate my long-term swing trends, price might actually be anchoring down here, and this will put us in that 82 cents region. If that breaks, my goodness gracious, you know, open season for the global markets. And that's nothing new. We've spoken about this. We've spoken about the power of cryptocurrency, the changing of fintech, Ray Dalio's thesis on a changing world order, the complete, you know, artificial pump of the dollar based on a whole lot of monetary policy, but not a lot of intrinsic value to back it up, right? With democratic influences, spoken about how it is important to see all these small things, but also train in that direction, right? So EURUSD, I think we've nailed it. Pound USD was just to show you that kind of stuff. Right, new signals. Now I'm staying focused. New signals, because it's going to be so annoying to edit this video if I keep jumping in and out. Right, you know, like I said, Friday, markets have already tagged themselves on a bearish engulfing pattern. You should have been in it. I'm not in that sell. I was in that short-term buy, went to have supper, and markets just like explode to the downside. And I wish I hadn't closed my Nasdaq sell. I wish I'd opened a EURUSD sell, but it's perfectly fine. I need to withdraw. It's a new month. Dollar cost average into crypto. I keep telling you. Right. So we've got this in a relationship here on the daily time frame inside a structure that is technically speaking a demand. So it's very, very tricky. I'm not in this here. I would have loved to be triggered up there. So I'm going to be waiting for price to come somewhere here or there. I'll be waiting for swing sells. All right. Pound USD as quickly as possible. Like I said, I have already dealt with that with you. I am in it. We are in it. Keep holding. Keep holding. Right. If you're scared, I don't know why you would be, but if you are scared, take your stop loss that you still have here. I'm sure you've already done it. Most of your psychology is fear-based driven, and you just put it above the previous break of structure, not on it, just above, like that. See, there's a previous break of market structure there that does this, that looks like this. Just put your break even just above there. Why? We are hoping that this will hold. We are hoping that this will hold. So if I was to have a new entry on pound USD, believe you me, it's going to be here. I'm going to be trying to sell again there while holding, right? Let's do it like this so you can see carefully. While holding my previous sell with my stop loss there for the previous sell, and then a new stop loss just above there, right? What's my target for these swings? None. I have no target. I will close when market sentiment changes. I will close after I hear what Powell's going to say. I will close or I'll get stopped out in profits, okay? I have no targets for swing to position trades. None. I'm keeping my thesis. I ain't buying anything unless my thesis tells me to buy it. And right now, I'm a seller. Right, so that's pound USD done. Moving fast now, guys. USDJPY, you know, painful, right? The last time we bought this thing was all the way in August, right? And we haven't received any good interest, or I have, maybe you have, right? So I am looking for some. These areas are white because they're not cowboy. When I make it red, it means it's high risk. I'm most likely not going to take it. If I mark it green, it means I'll put a pending order for a buy. Yellow, a pending order for a sell. When I mark it white, I'm watching. So on my watch list, right? I want to see price come. Why? Markets have arrived at a very big supply. USDJPY is literally the foster child of monetary policy divergence. The dollar has an FOMC constantly pumping interest rate hikes, strengthening the dollar. JPY is the opposite. They are constantly not doing that. So you have a monetary policy divergence with a currency that gets pumped in terms of interest rates, gets stronger and stronger and stronger. I'm very animated today, right? I was low energy, now look at me, all right? And then, JPY is weak, right? So somewhere here is an interesting thing on the governing time frame. We've got a bullish engulfing pattern, and you can see I've got a daily buy there and a daily buy below, right? So that's why those are marked white. But if you look carefully at this chart, if I remember very carefully, and we want to see where is price going, man, we can play this game all day, every day, right? It broke this supply, broke this supply, broke that supply. Now there's this supply. Inside this white zone here is the true first daily supply that market is going to react to. I'll repeat myself. The white zone in the yellow zone is a daily supply that markets are going to first have to react to. We know that there's no shortage of how high price can go. As long as FOMCs keep doing what they're doing, right? This is great. And Powell kind of say, we are going to keep creating pain. He literally used the words pain in the market. I mean, I read his speech to you in the previous forum, right? So what I'm looking at here in USDJPY is kind of like a simple reaction. Number one, I wish price runs without me for another week or so. As painful as that is, I wish you get into the supply, and I wish this will give me better risk-reward ratio. All right, better. All right, and then so I'll have a risk here and a risk there. If you break here, right, if you break through the zone, I will lose a little bit of money, but oh my goodness, I'll be even happier with the risk-reward ratio going up. All right, we still have a pending order down here. This is literally if the world comes to shits and like price makes it all the way down there, right? It's very unlikely. So I'll be looking at these two buy areas for USDJPY. I will only sell in the zone here on the daily if my DXY is doing something very correlated similar, right? Otherwise, I'll stay out of the sells and wait for the buys. That's just my trading style. EURCAD, ladies and gentlemen, let's go. Got about 10 more assets to look at and we call it a day. Nothing. We do nothing. We do nothing. I don't even know why it's on my list. I do not know why my team asked me to look at this. We do nothing here. Yeah, let it fall. Let it fall. EURCAD, EURAUD, EURUSD, let them fall. We are not, am I in this? No, I'm not. I don't even a triggered order, right? So I'm still waiting for here. My next video is going to be on market structure, just plain old good old teaching. This is good. This, sell side down, back up. This is literally what we call, switch and bait for retail traders. They are not aware of it. And on the daily, it takes forever for you to see it. On the daily, you see the stuff on 15 minutes every single day. This pattern I've just drawn every single day. Every single day. My next video is going to touch on the stuff, right? There's a support resistance jump. Smart money then forces the markets to fall on one side, wiping out one side, pushes market the other side. To wipe the other side, goes to mitigator zone somewhere here. So let's wait. Let's wait and see on EURCAD, right? Just be patient. As long as this market is falling, we are fine. Let's wait for us to get triggered. And then I said we're going to look at pound Swiss franc, which I'm pretty sure I want nothing to do with it right now. All right, there's nothing to do. There's really nothing to do unless you're in. I'm not in. All right, and I can't tell you where to get in because price has not given me my rule-based entries. Price has not given me my rule-based entries. The 4th of September, I want to announce this. Maybe not now. Let me wait for my team to be sure. But I'm pretty sure the first Tuesday of October, we are going live. 365, we're going live. Trading psychology, and then we're going to go module 1, module 2, module 3. Module 3 will be up. So those of you who want to access module 3 and do it in the meantime, that will be up for you, like in the remote course, right? But I'm going to do one live sitting for the year. 2 years ago, I did 4 lives in 1 year. Back then, the course used to take me 8 weeks to complete, just teaching them live like this, like how we are now. That was 2 years ago. 4 lives. So 4 8-week sessions. We're just teaching 10 people, 5 people. The following year, I had a baby. I managed 3 lives. My partner thought I was crazy. I thought I was crazy, running off floor, driving home to get home at 6 p.m. to turn on a Zoom camera to talk to 10 people on trading. I loved it. Last year, I think I did 2 lives. This year, I've done no lives. No Monday to Friday market education. I feel bad, but I want to say, really, please, gear yourself for this. This is the only live that's going to happen this year. You're going to want to do it. Now, how it works, if it's your first time attending a live and you register for the live, you might pay a little bit more in October. I don't know yet how much more. But if you're a 365 registered student, or you register at the current price, whatever the current price is, or you joined us last year, or you joined us 2 years ago, what's the current price? I think it's 200 and something bucks. Forgive me, I should know this stuff. Right, there it is. So it's about 220 US dollars. for everything. That means when the live starts in October, it's for free. So you're already registered. The lives are a way for us to touch base with each other. But the difference with this live is the first module we're doing together is a module I've never done before in front of anyone for the first time, and it is trading psychology. I repeat, this is not something that's going to get cancelled or moved around. I've had to literally move corporate clients around. I've had to do it on Tuesday, the 4th of October. We kickstart with module 4, trading psychology. That's going to run for about 2 to 3 weeks. Right, I'll be live every Tuesday, Wednesday, Thursday from after 6 p.m. South African time, or maybe 6 p.m. I'll communicate closer up until about 8 p.m. every single Tuesday, Wednesday, Thursday. First for trading psychology until we are done. I'm pretty sure towards the end of the month, I will then start module 1, basics of supply and demand, module 2, my trading edge, module 3, which we'll already have. I'll do it live with you again. I will be live with whoever is willing to learn from me from October, throughout the whole month of October, November, and halfway to December, because it's going to take me that long to finish my entire course with you. I might never do a live next year. I'm not sure, but this year you can see I struggled. I love this stuff. I love teaching guys, but I'm only human. I'm only human. I only have 24 hours a day. So either I sacrifice what I'm doing on the floor for 10 people, and which I've done year after year to try and build the academy, or I just pre-record stuff and then get 1 or 2 people whenever they're ready to learn, right? But the law is still the same. When the student is ready, the teacher will appear. I'm letting you know I'm breaking that law, and I will be present on the 4th of October. So if you want to get in there now, between then and now, try and register for price, because we will have to. I'm done. Whatever. I'm not a salesman, but you guys have heard me. You take it how you want to take it. 4th of October, it's going down. It's going bananas, right? You wouldn't believe. I've been watching this stupid show on YouTube where this guy goes, it's going down, it's going bananas. I can't believe it's that permeated. Now, pound AUD, next one. This is wild, right? This is a cowboy area that I warned you guys about. Cowboy means it's a high-risk zone. Literally took my share and got out. And I've just been watching this cowboy zone rip it, right? I haven't been in this whole movement here, right? But pound AUD is literally doing the most, right? So we've arrived at a significant area. I guess that's why it's up on my list today, right? And I guess, some pro traders might be considering this as a buy zone, but I still see a little bit of sell movement. Clean PCP, that high risk area created even on the governing time frame, which has finally resulted in a breakout, all the way down. But we are approaching a demand. I think we are roughly, let's see, roughly about 3 or 4 days to making contact. Given it's about 151 pips, right? 3 or 4 days. We should be there. So just be very careful. If you are in this cowboys, sells, get ready to take profits. Unfortunately, I got out a long time ago. Never got back in because I assumed that it was a high risk area, break of market structure. And if you want to take some very short-term high risk sell setups, then that might be something to consider Monday, Tuesday. But just be very careful, right? Because this is what you are up against. Your risk-reward ratio is a 1:1. Kind of trades that I don't necessarily like to take personally, and you really just need to make sure you're not holding a risk on buy. So this break even. If you want to hold it and you think it's going to melt through the pot, then make sure you're on break even, so it's not risk-free. But this is crazy, right? There is no real sufficient weekly demand here, right? There's going to be a lot of buys somewhere down here, but this is nonsense. This is not a thing. So really, if you get in and then you break even at the right time, then you might make some serious money, right? You might get lucky and price drops and melts. So yeah, this is something to look out for on pound AUD. Next one is USD China. I mean, I wouldn't. 1:24. It was a beautiful trade. And I just miss it. I just miss getting into something so good, right? So this was what we closed a long time ago. Well, not that long, but yeah, long enough. Sometime earlier on this year, got out, or I got out, and have not had the best entry ever, right? So it's 1 is to 28, not 1 is to 24. I'm going to delete that now, and then we're going to reanalyze this market and see what's good, because this is nice. Let's say on the governor, we still have a parabolic structure. There's still a lot of movement to the upside. So we might get lucky. We really are hoping for some type of US dollar pullback. If you do get it, my friends, please maximize on this, because this will be good. This might only get triggered as well when the tide is turned. And what that means is, maybe first the supply would get activated and then price will come down. If that's the case, then the area of value becomes less appealing to me, because now supplies are in chunks, not just any supply, it's a governing supply. So then now we must really work with DXY charts to make sure we are on the right path, right? So this is what it looked like on the weekly, all right? Obviously, this would be the better take on the daily. That's over there on the inside. I don't care about this. And then there's obviously this. So this is literally looks like a reincarnation of USDJPY. So this could happen this week, because the DXY, we're going to look at the DXY next, right? This is possible, right? And this will be good, but this will be very, very bumpy. It will be a very bumpy emotional trade. You see this every time they give you like a surface level demand here. They want a lot for it, right? Look at that, taken out for the lower demand and then equalize. Remember this pattern that I showed you about, that you see it all the time for retail traders, right? And then boom, there, stop. Just please watch my next video on market structure. It's dropping Monday, Tuesday. I'll do it this day. You see that? Resistance, support, and then get burnt, right? And then markets continue, and I'll explain to you exactly what the banks are doing at this point in time and how they mitigate the results, right? And then we have this, right? So we are hoping for some type of impulse move, but very short to the downside, and then markets go back up. I would actually keep a long, area value, stop loss value there, right? And then hope for the best. But if this fails, then please note that price will have no choice to drop. But the overall direction of price, no matter what, it's going all the way up there. That's the overall direction of price, no matter what. What I'm worried about is markets actually taking this area seriously. And to do that, you must keep track of the dollar, DXY, which is our next chart anyways, right? So look at it now. The dollar popped a monthly governing time frame. I think I put this up on the public 365 Traders War Room Telegram. I repeat, just join our public Telegram. I think the link is there somewhere, right? Down below on the video, right? 365 Traders War Room, where I'll tell you when these things happen, map it out, tell you what it means. But there we go. The DXY broker governing supply. All right. So technically speaking, there shouldn't be a yellow zone right now. But this was not a bullish engulfment. To be honest with you, there's really there's a lot of nonsense going on here. But do I see price falling all the way down? Not really, until maybe something drastic happens in the markets, right? This might be a very good place to wait. Now that we know that the supply has been popped, I'm gonna go at Kinehashi to get a confirmation, and there is nothing. Right, so Kinehashi wants most buyer volume down here and down there. Okay, so I'll still keep this area open, but just so you know, we're in weird territory until we get a clean signal from the dollar, right? Because this is not a bullish engulfment. So for me, I do nothing. That's nothing as well. It's nothing to me. So the only time I can see a real imbalance is over here. It's just a classic trade, doji, full body next to it, and a volume-based candles going to the upside. So I'm going to wait there for the dollar, and sky's the limit again. Once again, as a track run. Why? Because I think markets already kind of like priced in FOMC. But if they were to do this, this would be a better reflection of what markets think is going to happen on the 22nd or 23rd of September when Powell comes through. So that's DXY. Next chart. We're not going to waste time. Gold. Keep telling you guys sell. I keep seeing people buying. I'm like, what's going on, right? This is literally markets have completed, a rally. Then on Friday, with NFP, I don't know why dollar was a little bit shaky, give or take. It was at the beginning, and it wasn't. Now look at gold. Gold ended up on Friday. You know me. I'm waiting here. I'm waiting there. I'm just gonna wait to sell and see what happens. when price gets there. Right? There's not there's not much to do. There's not much to time to waste. If you want to buy. It's up to you. But I'm set in this market. We've been triggered on this for a long time, man, and I'm tired of doing nothing. So I thought I'd bring it up and ask you guys your opinion. Not your opinion, but just to tell you my opinion. Palladium is struggling, and it's struggling because gold is struggling, right? So if gold is falling, then why are we holding buys, right? So holding. And I personally didn't take profit, and then price hit a supply, came back all the way down. Like, maybe I'm emotional. Maybe that's it. Maybe I should have gotten out of this. I don't know, right? And then I saw a bullish engulf, and then fine. I didn't take another buy here, but I'm holding down buys from there. And come Monday, just so you guys know, I'm closing this trade. Might as well just take the little profits I have. Should have exited there. Clearly, there was a supply. This yellow zone, I drew it last night, by the way. So maybe I didn't think about where my daily supplies were when I did this chart a long time ago. But this is not for me, right? There's a supply right here. Let me just draw everything up for you. Look at this. But I'm expecting so much from Palladium. I'm expecting Palladium to break this, to break that. Just to go back. I'm just gonna close it. I'm gonna close it while it's still in profit. So I thought I'd let you guys know that come Monday, Palladium close. Okay, I'm closing Palladium. Only because there's not much going on, and I don't see this market getting better anytime soon. If dollar is going to get the bases and the push that it keeps getting, I assume that gold is going to just keep getting weaker and weaker. Right, S&P 500. Alvin's question, I'm going to answer it in the public Telegram group. That's a very good question in the public Telegram group. But I don't want to take away from what we're doing now, but I also want to give all the type of attention it deserves, and kind of like ask him a few questions before I just blurt out an answer in the war room here. But man, the power of one is a very powerful concept for me, right? Like you just need one student, and it's not just him. There are many, but I'm saying the idea of just focusing on one person every time you talk to 100 people, and then those 100 people become that one, is such an incredible thing. I mean, if you look at what Alvin posted on the 365 public Telegram group, like no bull crap, no nonsense, no over risking. Set and forget trader, holding S&P 500. I mean, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days. You cannot find a cluster of retail traders who can make this type of money consistently, because they either over risk, they're in and out quickly because they don't understand. This is literally the project. I could not be more prouder. This is amazing work, Alvin. I want to quickly say that again, man. And I'm going to answer your question. I'm sorry, but I'm going to deal with your question in the group. So if you guys watch and are not in the public Telegram group, join the public Telegram group. And he wrote here, power set and forget. I've been busy with work, blah, blah, blah. And I've just been holding this thing. And it's just incredible. It's absolutely incredible. I love it. I love it. I love it. I love it. Right. So the question here was this beautiful chart that he created, where he's looking at the S&P 500 from a bigger perspective. This is his chart. Like when people start to think deeply about the stuff they do, they start to ask you pertinent questions, and it's not purely as a result of mentorship. No, I don't want to. It's purely a result of an individual taking his or her journey seriously. I'm just now the sideshow. I got a course. Okay, cool. I make videos. Cool. But now you're taking center, and shout out to you guys, man. Right, so look at this. He's kind of like marked out a pattern on the S&P 500, and actually very much is linked to Lord Collins' question about the trajectory. And his overall question is, given that trade that I just showed you on the daily, where he has sold, he's wanting to hold a little bit more. He's like, look, man, can't I just hold a bit more? What's your take? Should I hold a bit more? Could price keep coming down? There you go, Lira 657. Before closing this trade, I looked at what happened previously. Amazing. Back test previously, right? And this is what happened previously. Then he says, red arrow drop in September, green arrow September rise, and black arrows equal September rise but October drop. So for me, I'm thinking of holding through September. Any thoughts? And then other registered students, Sia, is saying, look, man, I had the similar thing. Sia asked me a very dope, S&P 500 question. a couple of days before ADP dropped. So me and Sia had spoken about S&P 500 here when we were sharing this chart. And I think I remember responding to him on S&P 500. This was my S&P 500 chart. We spoke about a lot of things. And now both of them are kind of like looking at this thing. And guys, gentlemen, shake my hand. Thank you so much. Shake my hand. If one or two people do this, I don't care if 315 people are in the group and they're all silent. Just this is enough for me to keep going. So thank you so much for letting me know that people are hearing me. Right, so I will come back to this in the public Telegram group because I need to pull out some charts and look at a couple of things. But I don't know if what I'm about to say now on the S&P 500 is going to, overtly answer you, right? But I'd like to also deal with your question, in the public Telegram group personally sometime today, Sunday. Right, so this is the S&P 500 on my chart. Right, look at this. For me, there's no demand here. That's number one. It's gone. It's gone. It's gone. Why? It's broken. How is the demand broken here? Well, markets chose to hit the top part of the low order block below. If you draw it with the area of competition, you can see I ain't making it up. But the first demand is gone. When a demand is broken 9 out of 10 times, there is an inclination of a confirmation of a trend. And in this case, a sell trend. You only break demands because you want to go down. When they broke the demand, they spiked the living daylights out of short-term traders who don't understand long-term patterns, and they use NFP to brutalize people, right? So if you go H4, H1, you'll see what I mean. Look at this. Drop, big rally into the zone, and NFP dropped here. NFP results come out at 2. Once again, job numbers good. Risk assets ran. EURUSD ran for 32 pips. Look at S&P 500 running, bullish engulfment. What's this inducement? Hello? Look, man, I got a bullish engulfing to come by here. And as soon as price leveled up, no real supply to the left. I'm on the 1 hour time frame. If you do a scenario analysis, it must be based on the New York session for indices, right? Look at this on the H2, no real supply to the left. Everything was smoke. Markets fell, 5 o'clock. 4, we get a bigger fall in currency at 7 p.m. You do with that information what you want to do with that information, right? So then markets fall through and break the demand. So going back to the daily, this is what it looks like right now, right? So we've got a new supply zone that's been created there, and a new supply zone just above. The Collins question, which is, well, what if the Asian and London session rally up about 200 and something points, and then during that particular rally, then they drop again, right? So let's see. That wouldn't happen in one day, and that's 2,000 something. What am I doing? Sorry. Reduce. So on average. So if I take on average, given where price closed between the open, that's 267 points. And I could see that. Why? Because this area of value on the daily needs to be retested. So if Monday for me was a brutal market day, and the London session was open, you see what I'm saying? Collins magic number, 200 and something pips, whatever it was last time anyways. I'm saying on average, what if we get a green morning and London session, like you say, we touch this area here, which would only go up about 200 and something points, and then we drop 26 points. So it's not even that much, to be honest with you. We drop down. So those are the options on the table here. For me, anyways, I'm not a buy in this market. So Collins, I don't know the buy trajectory, but I can tell you that I don't mind selling them. I don't mind selling them, which means, Alvin, then if there's potential for more selling, you might want to consider holding, right? But we need to break these charts down in a much more slower pace in the public Telegram group. This is what we have here. Did markets equalize there? Yes, they did. Right, so we've got an H4 demand that's not broken. All right, and if you look left, we've got a couple of zones that have been broken, and if we feel the wicks here, then this is the way down. But if this holds, if there's not buyers, then we need to first see how this zone is going to be. So by New York session, Colin, everything will be clear. I think Asian and London session have a tough job. They have to pave the way without even the New York session happening on Monday, right? So technically speaking, Tuesday is where markets want to catch up with what the London and Asian session did. So this is something to look out for the S&P 500. The real demand that I am lobbying for, and not as a buyer, but just as someone who's Interested to see where price will begin to retrace next. It's all the way down there. All right, personally speaking, I have no interest in anything else on S&P 500. And I think if we're to watch out for how buyers were to think here, retracement zones are being maxed out. 50% was maxed out. Golden ratio is where we are right now. It's looking like it might get maxed out. And straight for the downside. And then I wouldn't be surprised. Powell did promise more pain. How much pain, no one knows, but he promised more pain. So for me, by the way, guys, as a bear, all I want is to get S&P 500 and the SPY back below 20%. I want to go back to that comfortable zone. Remember, there's a bear market a number where stock falls 20% from its all-time high. And right now, we are now at about 18.37%, right? We're at about 18.37%. And remember, S&P 500 took a while to drop below 20 because NASDAQ will let us through the bear market crash. But I need you, Mr. SPY, down here. And if I extend to see where 20% is, it's on the other side of this little demand. So this little demand all the way there, if they to break this demand, they would be already way past 20%, so 20.7. But once that breaks for me, the optimism in the bulls will capitulate. We'll get retail trader capitulation, institutional bull capitulation, and once they start to capitulate, I want us to test these lows, and if we can test these lows and break these lows, I'm a happy guy. I'm a happy guy because my thesis has played out throughout the whole year, but also I get bargains on crypto. Right, so that's my long-term thesis, but I'll come back to this. I'll come back to the Sia, Alvin, and everyone else conversation because I think it's actually important. But I wanted to let you guys know I saw the question. I appreciate the question. Keep pushing, gentlemen. Keep holding trades, good trades. Those things pay. Set and forget. Those things pay. Trust the work you've done. Trust the work you've done. Stop going. I'm very happy. I'm very, very happy, guys. Thank you so much. Right, NASDAQ 100 is the next thing. You can see similar setup. There's a silly demand just below. We want to break it. Let's break it. If we're breaking it, let's break it. If we're breaking it, let's break it. If it goes back up, we know where to go. But like I said, because of the trajectory of the market and the linkages between sessions, our Asian session has already given us a good test. I'm hoping for a very good run to somewhere here. Right, at least on J2225, which really might actually just force the trajectory of the New York markets to fall, given this always happens first in terms of order block tests. And I've done a couple of videos around that, right? So this is what I'll be looking at for NASDAQ, S&P 500, US 30, and J225, right? Granted, I'm no longer in my NASDAQ sell trade. It's been a beautiful blast, but I had to close it. Look at US 30. US 30 is actually, sitting on the demand. So that might be a market you want to look into. But remember, unlike the other markets, US 30 has a supply just above as well to use, right? So, right, just look at these pairs. Look at them. Look at them and what they're doing on all aspects. Every single day at the end of the trading day, you'll be surprised at the similarities, right? Crude oil. Crude oil, I spoke to you guys on Friday. I told you guys I'm closing crude oil, keeping Brent oil open, right? Closing crude, keeping Brent oil open. I am worried about this $100 mark. Somebody in the public Telegram group, I posted a tweet at Kremlin, right? So I posted this on the public Telegram group on Friday. I think it's actually important to bring up. So let's bring it up. Let's bring it up. Let's bring it up. All right, so I hope I'm on the right screen. Have I been on Telegram the entire time? Not on charts. Jeez, I don't know. Right, so look at this. Kremlin Russia will stop selling oil. Stop selling oil to countries which support price caps for Russian oil. So you want to do your sanctions, blah, blah, blah. Well, we'll stop selling oil to you. So you stop selling oil, you cut the supply, demand goes up. Wait a minute. Isn't CPI the one that markets went crazy about based on inflation going down? But isn't the reason why inflation went down largely because oil is below $100 per barrel? So if the reason why inflation is supposedly going down, it's only because energy prices are down and not that prices of all inches are down, and this comes up, wouldn't this just bring inflation back up? Not that it's not up, it's already up. Wouldn't it take us back to crazy numbers, right? So something to look out for. something to look out for. Then someone was like, well, if the West puts a $40-$60 price cap, then Kremlin refuses to sell to those. Another registered 365 says, you guys, man, you made my weekend. You know, shout out. The green cap won't supply below restriction of supply. Yes, you're right. Yes, sir. Causing a rise in price oil. Yes, that's correct. Further putting pressure on the world economies. Absolutely. And then everyone's just printing money, right? So this is it. This is literally what we do. The difference is we are not retail traders. We do supply and demand smart money concepts, and I really am. Thank you, Ronald. That's exactly it. This is exactly it. All right, this is what we're here to do. So I completely agree with that particular analysis. And when I look at the oil chart, on Friday when I said I'm closing, I did warn you guys, be very careful, right? So I've marked $100 per barrel. Why? That's a recessionary number. So as long as oil stays above $100, right? All bad things that you can imagine begin to happen again. Inflation, recession becomes worse, blah, 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 blah. Fed is forced to increase interest rates, maintain a tight rope, blah, 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 blah. Right, so I closed here because, well, there was a demand down and I was holding a sell, and then this news came out. Like, I don't know, I don't want to be in a bolted recovery, like take profits, you know, where I am. But this zone, this supply here and this new supply, these two supplies here are to be watched out for. If markets break through them, I won't be selling at them anymore because now they now have the entire world's attention. So there's going to be too much competition, a lot of manipulation, and I don't want to waste money here. But I'll be watching these supplies very carefully, right? If markets break through supply 1 and 2 and eventually cross over $100 per barrel in the next 2 weeks or so, we are going to have problems, right? It might not inflect on the CPI report coming this September, but it will definitely inflect in the following October CPI report for the month of September, which will impact interest rates somewhere along the lines anyway. So just be careful of that, right? So Brent Oil was the one I held onto because I was like, well, if I'm going to close out on crude, let me hold this swing in oil. All right, and Brent Oil seems to have done what we said it was going to do, and it's sitting at demand here. So I have locked profits. I'll show you where I put my stop loss because we are knee deep in a demand, right? So I've just put my locked profits just above this supply on the 2-hour time frame here, somewhere here, right? So if anything goes wrong, then, you know, I'll get stopped out in profits. But if price starts to continue down, then we'll hold it, right? So this is just something to look out for. In terms of signals, I think we should stay out of oil for now until we know. Let's look at COT data on Thursday this week on oil and then see where institutions stand. Then I'll give a signal for that, right? And the last thing on the list that I've shown you guys so many times, the Nikkei J225. I've enjoyed this war room, ladies and gentlemen. You know, sorry I started off low energy. I thoroughly enjoyed my time with you as usual. I hope you liked the video. I hope you subscribe. This is everything I had planned for you today. Keep an eye on the 365 YouTube channel this week. For this month, there's a lot of information I'd like to get to you. Do register. Really, you register now to start the learning process. Get your module 1, module 2, and really, there's a lot of information that you need to understand. But also avoid disappointment because I don't mind running live classes for 5 people. I'll run live classes for 2 people weeks in advance. Ask Dr. Francis or some of my older students. Literally, these guys are doing their own big things now. I don't mind that, right? But because of that, live classes will be slightly more expensive. So, but if you register between now and then, before that happens, it's completely for free. If you're a digital student, you don't pay again, right? The information is for you. That's why I'm saying even if one old registered student shows up, we're running it. But the difference is there's only going to be one live session where I do my trading psychology module, which is this October, right? So you want to get in that. I expect the entire academy to show up because that is what's going to elevate your trading game for next year. All right, so 365, shake my hand. Don't forget to like, don't forget to subscribe, don't forget to send this to someone and say, check this guy out, watch the videos. I appreciate all of you. See you next time. Peace.